and welcome to the program In Focus. I'm Moe Chanda. In 2021, Open Knowledge Repository research stated that harnessing African natural gas was a new opportunity for Africa's energy agenda, and that over the last several years, a series of major offshore gas discoveries in Mozambique and Tanzania have rekindled interest in expanding the use of natural gas to address the continent's power shortages. In Zimbabwe, in the early 90s, gas was reportedly discovered by Mobil, but reserves were unexploited due to a lack of regional demand and Zimbabwe's economic challenges. Fast forward to last year, 2021, Invictus Energy Limited, an Australian firm searching for oil and gas in Zimbabwe, signed a petroleum exploration, development and production agreement with the government of Zimbabwe, setting the stage for the Australian firm to expedite the exploration, with official data showing that the Muzarabani prospect has been independently assessed to host prospective resources of about 9.25 trillion cubic feet of natural gas and 294 million barrels of oil condensate. And if the claims are anything to go by, the field would be one of the largest undrilled structures in Africa. So once thought of as a Nigeria once story, once thought of as a Nigeria-only story, gas to power in sub-Saharan Africa is now being considered in a continental-wide context. And today on In Focus, our discussion is on how business can play into the oil and gas sector in Zimbabwe. Joining me via Zoom is Scott Macmillan, Managing Director of Invictus Energy Limited. Welcome to the program In Focus.
Hi, Mo. Thanks for having me. Great to be here with you.
Well, let's start off. Let me start off by getting your views on the current oil and gas industry in Zimbabwe and the region, if I can put it that way. That's in the last couple of months or past year. I mean, a sector overview, also giving us an idea of the magnitude of a project like this, Scott.
Sure. So I'll just provide some regional context first, and then I'll go probably into some more details about what we're doing in Zimbabwe and the magnitude of the project we're undertaking here. Southern Africa has had a bit of a purple patch from an exploration sense more recently. In South Africa, in late 2018, Total discovered the Brupata field offshore of Mossel Bay, which is around 5 or 6 trillion cubic feet. They then followed that up with the Leopard discovery the following year, which is, sort of similar amount, 3 to 4 TCF and a few 100 million barrels of condensate. Everyone, I think, is well aware of the discoveries in Mozambique that have happened over the last decade. Those are world-class, hundreds of trillions of cubic feet of gas that's going to change the shape of Mozambique. More recently, just in the last month or so, we've had 2 world-class discoveries in Namibia. We've had Shell discover the Graph 1 well that's estimated to be around 300 to 400 million barrels of oil, and then Total, again with their partners in Namibia in Block 2918B, have discovered the Venus oil field, which is estimated to have around about 2.5 to 3 billion barrels of oil, and as well as some associated natural gas, and amongst a very small population that Namibia has. Dividing that up amongst it is going to set Namibia on a very, very different course from a resources perspective. So there's been some great success around the region. Zimbabwe, though, more recently has been unloved as a jurisdiction, and that's not really because of the below-ground potential. I think a lot of it has been perceived as gas-prone, particularly from your lead-in. When Mobil were exploring in the early 90s, they were out looking for big oil targets. And they did find some big targets, but thought that they were more gas-prone as opposed to oil-prone. And there was no structured market for gas in the early 90s in the region, abundant power, and no way to monetize gas. We picked up this project in 2018. And by the time we looked at it, the gas dynamics had drastically changed. There are a number of ways to monetize gas, not only domestically, but also in the wider region. And we can talk about that in a little bit. But what we've done since we've picked up the project is mature everything since Mobil left it in the mid-90s when they relinquished the acreage, reprocessed their data. We got a lot of confidence from that, identified that big Muzarabani prospect, That alone has 8.2 trillion cubic feet and 247 million barrels of condensate of prospective resources. So again, I must stress these are only prospective resources, so there's still geological risk associated with that. There's no guarantees of us making a discovery. We can't change the state of nature underground, but we're estimating it from the techniques, the geophysical techniques that we have to map and image underneath the surface of the earth. Ms. Rabani, the targets are from 1,000 meters to sort of 4,000 meters beneath the surface. So, we're looking at quite deep into the earth. Mm-hmm. After that, last year, we went and acquired our own seismic data. That is busy being, the processing has been completed. The interpretation has just about been completed, and we'll be announcing the results of that in the near future. So we've got that locked away. We've got a rig arriving that's coming to drill at the end of June, early July, and that is quite an endeavor. So if you look at the magnitude of a project like this, the seismic campaign was quite a large project. We acquired 840 kilometers of data. That data set was about 4,000 gigabytes worth of data. Mobil's data set, which was 110 kilometers of seismic, was 16 gigabytes of data. Again, looking at what you can acquire 25 years apart, or 30 years apart from those two surveys. We've gathered around 200 times as much data that Mobil did from a similar type of survey. So things have come a long way. We can image in much greater detail. Now the rig's coming. We're preparing to drill. That's going to involve 70 30-ton loads just for the rig itself. It's a 2,000-ton drilling rig, 54 meters high. The camp that comes along with it is another 30 loads of 30 tons each, and then we've got all of the services and ancillary equipment along with it, which is another 50 to 70 loads coming in. That will cost us roughly $25 million, and again, this is still exploration, so this is all at risk. And but we're going to find out whether there's commercial oil and gas in the Kapora Basin in Mozambique and Iberia within the next few months. So an exciting period ahead.
Well, definitely exciting. Definitely exciting. And clearly this is a very huge project, which brings me to the question of infrastructure required to support successful projects such as this, and to ensure that there's that successful beneficiation of these resources. Never mind, there is the issue of trade itself, the markets, as well as reviewing the legal, the regulatory, as well as the contractual requirements conducive to that gas trade. Thanks,
Mo. And yes, going back to why we were attracted to this project, there are two things as an oil and gas company and as explorers that you look for. One is the below ground potential, whether you've got a reasonable chance of making a commercial discovery. And then the second thing is the above ground conditions, which is your ability to monetize these discoveries if you make them. And of course, if you can't monetize it, then there's really no point in, regardless of how good the geology is. So a number of things have changed in Zimbabwe since this. One, we've had the change in government, and the policies that they've put in place have allowed and enabled foreign investment to come back into the country. That was one of the things. If you look around the region, we've had a huge amount of activity that oil and gas exploration and development that's been going on around the region, and Zimbabwe's been left out. And that was really because of the above ground conditions and investment environment, for the preceding sort of 20 odd years. That's not changed. We've had a lot of legislation that's been amended, as well as incentives that have been put in place that have allowed us and given us the confidence to come and invest in Zimbabwe. And given, we're a foreign listed company in Australia, and our investors have had the confidence to put, to provide us with the funding to come and do this. So that's been a huge thing. Obviously you can't change the state of nature beneath the ground. That stays the same, but what has changed are the above ground conditions. Secondly, looking forward is the infrastructure, the regulatory requirements that you need to go forward and monetize your discoveries. And I think always the perception in the oil and gas industry is landlocked countries often struggle to attract investment because companies are often looking at getting products to the coast and then exporting them into foreign markets. Our focus and the real opportunity that we see is in not only domestically in Zimbabwe, but also in the wider region. We're not interested in exporting this, to foreign shores. We see a huge market and a huge opportunity, not only in Zimbabwe, but also in our neighboring states. And that's been demonstrated through the gas LMOUs that we've got in place with Sable Chemicals. So they manufacture ammonium nitrate-based fertilizers. They're currently importing gas from South Africa by rail. They came to us and said, look, we understand it's exploration, but we want to be at the front of the queue if you make a discovery, because any natural gas feedstock that they can get will ensure that fertilizers the feedstock is cheaper, fertilizers are cheaper, and they can produce more of it. So, you're looking at import substitution, and fertilizers are obviously one of the main inputs, and we've got a very rich agricultural base as a country in Zimbabwe. Secondly, gas to power. I think we're all familiar with the power challenges, not only at home, but also in the rest of the region. And we've signed a gas LMOU also with Tatanga Energy, who are a power developer, for 500 megawatts for 20 years for a gas to power development. So again, big markets, big opportunities, and I think probably for your listeners to put in context what this could mean from a potential resource size. So Muzarabani prospect is 8.2 TCF and 247 million barrels of condensate potentially. So 1 trillion cubic feet can produce 500 megawatts of power for roughly 20 to 25 years, depending on the design and configuration. So if we're successful, something like this can have an enormous impact in the region. So the domestic market, will be fully satisfied from a gas perspective and a power perspective, but it will be too large for just the domestic market. So we're looking further afield into South Africa, particularly in the gas to power realms, but also in supplying natural gas into South Africa, which is solely supplied from onshore Mozambique at the moment. We see a big market there and a big opportunity, premium pricing, and then looking at other potential. And we really want to focus on the beneficiation side of things, really in not only in Zimbabwe. And I think, once you have the infrastructure that's put in, pipelines, for gas, one of the things is you need pipelines to take it to your customers, and you're selling directly to one customer over long periods of time. And so you do need these quite large contracts over long periods of time to underpin that infrastructure and the pipelines. But we've seen from similar developments in Tanzania and South Africa that once that infrastructure is there, once those pipelines are in there, that other industries will then latch on to this cheaper energy that that provides that feedstock along that route, and you really begin to reindustrialize the country. So if we have that pipeline going down to Kwekwe, which is in the heart of our industrial region in Zimbabwe, we've then got the ability to now provide feedstock to other customers that will use it. You're looking at potentially the new stainless steel plant that's going in there with Chinchan, who are going to need a huge amount of energy for their process, but also for all the platinum miners who haven't been able to find the energy source to feed their refineries. Now all of a sudden you've got gas feedstock there that can provide that and underpin it, and all of a sudden you've got all of these add-on and value addition industries that can benefit not only directly the oil and gas industry, but further downstream as well.
Well, it is.
We're then looking at small-scale LNG, trucking that to some of the off-grid miners who are burning diesel. So you're replacing diesel with gas, which is 40% of the cost and 40% of the emissions. So that, the markets are huge. The infrastructure that we have around the region, from pipelines to roads to rail to power lines, there's an abundance of opportunities. And we're really, in the event that we do make a discovery, we're not going to be short of a market or infrastructure to monetize it.
Well, clearly we were going to touch on the downstream and middle stream industries, also looking at how even small, medium enterprises could take advantage of that. But for the benefit of our listeners, the program is in focus, and I am joined by the Managing Director of Invictus Energy Limited, and we are looking at how business can play into the oil and gas sector in Zimbabwe. Now, Mexico is one of the most fascinating global energy examples, Scott. And if we are to look at Qatar as an example, it shows what the possibilities are for the Southern African region, not only looking at the economic perspective, but also from a geopolitical perspective. And if we look at Qatar in 2001, that country's GDP sat at $17.5 billion US. But by 2011, as a consequence of the development of the gas fields, the GDP grew to about $107 billion. So taking into account this development over a 10-year period, what are the possibilities for a country like Zimbabwe wanting to invest more in gas and oil sector through exploration?
Yeah, thanks, Mo. There are some really interesting examples, and I think probably the two contrasting ones are Mexico and Qatar. Mexico's got some of the largest reserves worldwide, but their resources have been poorly managed by the state-owned oil company Pemex, and they did have a period of trying to privatize it. They nationalized it in the 60s, tried to re-privatize it about eight or so years ago, but have really failed in that respect. And you've seen the oil industry dwindle under that nationalization plan, because you do need expertise, you need the skills. They're also huge capital investments, and so the risk concentrated in one single state-owned entity is often too great, and it suffers from a lack of attention, a lack of capital for all those fields. Qatar, on the other hand, has brought in a lot of partners to help them, and they have thrived in particularly in the natural gas sense. So they've developed big export industries, exporting gas all across the world. Their major customers are in Asia and more so now in Europe. And I think energy security is a topic that's quite prevalent at the moment, given some of the world events.
Indeed.
And so, having your own energy or having energy sovereignty and energy security is paramount now for states. And if we look at a country like Zimbabwe, where we're importing petrol and diesel that consumes 25% of our foreign currency imports, power on top of that, as well as probably the other, fertilizer, everything else. So if we can be successful and we can start developing the oil and gas industry here, which is going to have a huge number of midstream and downstream benefits for multiple industries, and that effect and that multiplier effect that you get once it's developed is going to be enormous, and will put us on a fantastic pathway in terms of GDP, in terms of growth, and in terms of exports, because we'll have foreign currency that'll be freed up for other industries. We'll have products that'll be cheaper, fertilizer, power, gas to power we can do for somewhere between 2 to 5 cents per kilowatt, and that's a game changer for a lot of industries here, not only having affordable power but reliable power as well. So it can really put us on a very different path as a country.
Well, I did manage to speak to an economic analyst having economic perspective on the oil and gas industry, and Dr. Zex Murerwa had this to say. Let's take a listen to him.
The gas and oil exploration venture is an excitement to all of us, because it's bringing in hope, it's bringing in the results of much desired investment. Invictus Energy have got the requisite experience and exploration expertise, and we hope and trust that this will bring around and about issues pertaining to increased employment. Remember, the energy sector is critical, and gas and oil are very critical. Those countries that have done well in the world, especially in Africa, if you look at Nigeria as an example, have done well because of the energy sector. Zimbabwe needs to tap on this potential. So really, at the end of the day, besides job creation, there is an addition to the gross domestic product. We believe in the long run, this is a starting point which will culminate in the required and the desired investment. We need to move and also start to exploit our natural resources. But more importantly, if the exploration actually comes to fruition, one would expect more participation in terms of value addition, so that we don't fall into the mistake that we have made in the past of exporting raw materials. Lastly, it's also a culmination of the efforts of international engagement, re-engagement, and I definitely believe that this project will actually come to success.
Coupled to that take from the economist, Dr. Zex Mrerwa, we also had a chance to speak to development strategy to get his take from a developmental point of view, Mr. Simon Bere, and this is what he also had to say.
The discovery of gas, oil and gas, always brings aside a lot of opportunities, business opportunities throughout the value chain of oil and gas. So when we talk about value chain, when you get oil, it's crude oil, and it goes through a lot of processes that include processing and also producing products that are related to oil. So that discovery alone, if it becomes viable, if the deposits are found to be economic and they are exploited, it creates opportunities for a lot of other business opportunities, starting with the refinery of the oil. If it's oil, it needs to be refined, and then the different products that must be that are produced from oil, then it means opportunities for people who can then get into those different types of businesses that are associated with the oil. We can talk of grease, we can talk of fuel, we can also even talk about all the other elements that are related, even transport, distribution of that oil, and also the construction of processing facilities for the oil. These are all opportunities that exist for business. When it comes to gas, it's the same thing. The processing of that gas, also the transportation, and also the distribution of that gas, and also there are so many other services that are around those economic products like oil and gas. So, but now it needs support because it's capital intensive for most of the business opportunities around the oil and gas. So it means also support in terms of making sure there's funding available for those players who may want to play a part in the value chain of the gas and also of the oil.
Well, development strategist Simon Bere is speaking to us, and we were looking at how business can play into the oil and gas sector in Zimbabwe. But of course, touching on how even the midstream and downstream industries can tap into this sector. But given that perspective, Scott, with risks comes rewards. Now, looking at a project such as this, gas and oil exploration is pretty much very capital intensive. Let's talk about the financing aspect. What has been the structure in terms of how you will or are going to finance it, the financing, implementation schemes that utilize that synergy between the public and private sector in project formulation and development?
Sure, Mo. So to date, all of our activity has been financed from our shareholders. Listed on the Australian Stock Exchange, we raised money through equity issuances, and we've done that over the last 4 years to fund our program. So far we've spent around about $10 to $12 million on this project to date, and that will be spending another $25 million on the drilling program coming up. So that's a 2-well program for the basin, and so we've had very supportive shareholders, and that's been as of a result is one, the sort of magnitude of the opportunity, and two, really the perception and change of the investment appetite for for one, Zimbabwe, and that's because of the changes in policy, but two, also with with the macro events in oil and gas at the moment. Obviously, I think everyone's noticed the price increases, and that does increase investor appetite to invest in the sector. It's been very tough over the last 7 to 8 years since the 2014 oil price crash, but appetite has well and truly come back now. And so, to give you an example, we went out to raise some money for the seismic last year. We went out for $6 to $8 million, and we got bids for $33 million in 3 hours and shut the books. So the appetite has definitely changed. From the financing going forward, it is exploration is a risk versus reward balance, and there's reducible risk and there's irreducible risk. We've tried to reduce the risk as far as we can through acquiring that seismic data, but now we really need to answer the questions by going ahead with the drilling program. So we have been running a process to bring in a partner. Even the largest oil companies in the world, the super majors, the Shells, the Totals, the BPs and ENIs, they all have partner up in their ventures because you spread the risk and also the reward. Part of also spreading the reward and reducing the risk are the agreements that you have with government. Now, some of your readers or listeners rather may have seen some of the news, and we've partnered with the Sovereign Wealth Fund in Zimbabwe, and we're working towards signing a petroleum production sharing agreement. Now, what that does is it outlines the share for the contractors and the investors, and for the state. And oil and gas attracts much higher, what's called an overall government take for oil and gas than it does for minerals. So your government take consists of royalties, taxes, product or profit share, and then also any equity in the venture. And so you have far more that's returned to host governments than you do out of minerals. And so that ensures that, because if it does work, if it is commercial, then the rewards are very, very high, but then they need to be shared to make sure that the country gets their, her fair share of any resources. So that provides the state and its citizens with a risk-free exposure to a very capital-intensive and very risky industry, in terms of your rates of success of exploration. So it's a very elegant way of sharing the resources with the state, but still providing a fair return to investors. So our strategy going forward is, we've got the ability to fund this work program ourselves, and I think that's really been demonstrated from our shareholders who have been prepared to fund us at every turn and at every stage of this venture. There may be some partners that we'll bring in to assist with that, because even if we are successful in the exploration phase, we're going to need some help in the development phase, because they are intensive capital requirements, and then you also have some other parties who bring other skills and experience to the table in development. But also going on from that, you've got the other industries, ones that we don't participate in, which is the midstream and the downstream, and that's where the opportunities from a local perspective have a large array of areas that local companies can play in. So during the construction phase, you've got all the services that support us. You've got the midstream and downstream sectors. All of these areas will provide an abundance of employment opportunities, of investment opportunities, and so this industry is fantastic. I really love it, and very excited for our program coming up ahead, and what may lie ahead for not only Invictus as a company and our partner OneGas, but also for the country.
Well, I will ask you to just hold your thoughts there, Scott. We will just go for a short break, and then we will come back and just have a conversation on issues of sustainability before we wrap up the conversation on In Focus. Mr. Scott Macmillan, thank you once again, Scott.
Thanks, Mo. Thanks for having me.
So on Friday, the 25th of March, President Mnangagwa, in a keynote address to officially open the third International Renewable Energy Conference and Expo, he did say that Zimbabwe was committed to global aspirations and goals in relation to climate change adaptation. But also to that, he did speak about the obligations to work concertedly towards the realization of sustainable development goals, specifically goal number 7 that talks to affordable and clean energy by 2030. And we are hoping that we will have a conversation specifically looking at renewable energy among other issues. But still on the oil and gas sector in Zimbabwe, if we are touching on sustainability matters, I would want you to address there's one particular interest of green economy, the green economy factor. Care to indulge us in that light, Scott?
Sure, Monica. I think one of the things that's come out of the last few years is the narrative about energy transition, and that is seen really from a point of view of the West, where they're looking to move on from fossil fuels to more greener solutions, if you will. I think one of the tragedies, though, is jurisdictions in Africa are being overlooked. There are 600 million Africans without access to electricity, and that's not sustainable. We haven't been able to build our economies on the back of our own resources that's been enjoyed in other parts of the world, and I think it's morally bankrupt for countries in the West to say, we will not fund and finance the development of your own resources that they still use today in Europe and Asia, and the US are not turning off their gas-fired power stations or reducing the consumption of gas anytime soon. But what they are doing is cutting off funding for the development of resources of oil and gas on the continent. I think that's starting to change given global events, but it has been something that's been extremely frustrating from our point of view, looking at the energy deficit in Africa and in Zimbabwe. If you look at what the primary energy sources are, you've got a lot of it that is from biomass and the cutting down of trees, which from a sustainability point of view is awful. You've got encroachment into forestry areas, people burning wood for fuel, people suffering respiratory diseases from burning wood fires in their accommodation. So switching to natural gas as a long-term transition fuel makes a huge amount of sense. You've got lower emissions, you've got cheaper development costs, you're not burning diesel, you're not burning wood, it can replace coal. But I think in the long run, this conversation about energy transition in Africa needs to have the right context about it, and we really need to assert ourselves and say we need to develop our own resources and give our economies and our citizens the chance to industrialize our economies just as others have. So it is probably something you can tell I'm quite passionate about.
Definitely.
And yeah, it is something that can be done sustainably because technologies for natural gas have come a long way in the last 40 years. And we do have the opportunity to reindustrialize our economies and provide our countries and our citizens with cheaper and affordable and reliable power as well, which is the most important thing.
I know we did touch a bit on the legislation and regulation, but I want to bring you back again. Legislation and regulation required to optimize the exploration and development of Zimbabwe's resources. I mean, one would say in terms of regulatory framework in Africa, you cannot compare to Nigeria or Angola, who have been at it much longer. But from a transformation perspective, what do you make of it for a country such as Zimbabwe?
Sure. looking at those examples of Nigeria and Angola, you're right. We're not at that sort of maturity. They've been at it for decades, since the 1960s in those two 60s and 70s, Nigeria and Angola respectively. So that is a long, long way to play catch up. But what we can do is learn some of the lessons from those jurisdictions to make sure that we have the right policies and the right framework in place so that we can attract investment. And it's not only about attracting investment, it's making sure that investment can follow through to development on the success of on exploration success. So I'll give you an example in Uganda. Uganda's got world-class resources. The first discoveries, they were made in 2006. But we haven't had final investment decision on those fields to develop them until earlier this year. So you've had oil that's been discovered, around about 2.5 billion barrels recoverable of oil in a tiny country like Uganda. But the policies and the procedures to develop those resources weren't in place, and there was a lot of squabbling amongst it, and that resulted in those projects stalling. And so absolutely no one's benefited from those resources over the last 15 years. And finally, they found a way, and they've made sure now that there's a route now to go and develop it, and everyone's going to benefit. So again, we've taken that approach now in our with our project, and we've really had very constructive engagements with government to make sure that the lessons that we've learned from these other jurisdictions, where it's all well and good to discover something, but you really need to develop it for anyone to benefit, that those are put in place so that we've got the approvals necessary and all of the investment frameworks that are required. So not only from us as a company looking at it, but also from your financiers who are going to finance the big capital investments. So you've got your equity lenders, your debt lenders, for not only the upstream, the area of the business that we're focused in, but also the midstream and downstream. So all of those aspects need to work together for these developments to take place. Namibia is probably a really good example in the region. So NAMCOR, the state petroleum company, has been formed, and they've been at it for a long time as well. So the Kudu gas field was discovered in 1974, but they've had a string of dry holes, and so exploration wells have been drilled without making commercial discoveries since Kudu was discovered, and there have been a lot of teasing results, but nothing commercial. And they've had 30 dry holes in between Kudu being, the Kudu 1 and the subsequent appraisal wells in the mid to late 70s until Graph was discovered early this year. So that's 30 wells over quite a number of decades. The country had the exploration framework in place and the policies in place to keep oil companies interested and making sure that they keep exploring and keep putting their money at risk to try and find something. So that's a very important thing. One, so failure doesn't necessarily write it off, but you need to have policies that attract companies to come in and explore and put their capital at risk. So that's what we've tried to do in Zimbabwe in our discussions with the government, and they've been very, very good on that front, putting in the legislation required, putting in the fiscal and non-fiscal incentives to attract explorers into the country. And we hope that, once we're successful, that other companies will come and explore as well, not just us, because a rising tide floats all boats. We've seen in other areas of the resources sectors, we don't just have one platinum miner, we don't just have one gold miner, we've got a variety of them, and that really helps the industry. So we're not looking to do this all ourselves. We'd love to have other companies come in and explore in Zimbabwe as well and make a contribution to the industry.
Arab countries hold about 29% of the world's proven gas reserves, but every country except Qatar and Algeria is short of the gas supply needed to meet its current and projected demand. The rapid growth in gas demand is mostly a consequence of a sharp increase in electricity consumption, with developing countries having experienced growing structural weaknesses over the last decade. COVID-19, climate change have also further aggravated these, worsening poverty and inequality and starkly exposing the interdependence between people, the planet and the economy. So, with these aspirational goals from countries like Zimbabwe with respect to energy and natural gas development, including the efficient use of natural gas in the power and other sectors, strengthening and coordinating national energy planning for the gas sector, infrastructure development and prospects of the natural gas market, and the potential of natural gas pricing reforms for the promotion of hydroelectricity and other renewable energy sources are key. I'd like to say thank you to my guest, Scott Macmillan, Managing Director of Invictus Energy Limited. It has been a pleasure, and hoping to engage you on other conversations on In Focus.
Monica, thanks very much for having me, and thanks to your listeners as well.
This has been the program In Focus. Until next time, it's pleasant listening. My name is Moe Chanda.